Hi, Assalamualaikum and very good day to Madam Siti Nurhazwani Kamarudin and to my beloved friends. Today, our group is going to present and discuss about Customer Profitability Analysis, which is CPA. Before I start, I would like to introduce the group members. This presentation prepared by me, Nur Afa Shahira, Nurhanini Kistina, Nurhanisa and Aisha Fariha. Okay, now I will start with the definition of profitable customer. Kotler 1997 defines a profitable customer as a person, household or company that over time yields a revenue stream that exceeds by an acceptable amount the company's cost stream of attracting, selling and servicing that customer. So basically, what is customer profitability analysis? CPA is a managerial accounting technique that enables businesses to determine the overall profit a customer generates. It is a management accounting and a credit underwriting method permitting businesses and lenders to determine the profitability of each customer or segments of customers by attributing profits and costs to every customer separately. CPA is an important management accounting tool based on the recognition that each customer is different. Therefore, each value of revenue or cost generated by the customer does not contribute equally to a company's profitability. CPA's value lies in its ability to improve strategic decision making. CPA allows companies to evaluate their customers and know how useful it is for them to keep the customers. Based on this value, they can determine upon the cost of serving them or even to decide whether to continue or let them go. It has been found in a study that the size of the customer is not directly proportional to their profitability. Sometimes, even the large-sized customers can turn out to be unprofitable ones for a business. Here is additional information about CPA. It is generally approached by segmenting the customer base to calculate the revenues and costs associated with each segment. This is often used in combination with an activity-based costing, which is ABC strategy. After identifying profitable and non-profitable segments, profitable segments are maximized while non-profitable parts are reduced or eliminated. Now, I will proceed with the purpose of CPA. The main purpose of CPA is to provide organization management with the understanding of each customer profitability. It allows company to take different targeted actions and strategies against different profitability segments, having as a target increasing the company's total profitability. Next, to identify profitable and unprofitable customer. CPA helps to distinguish which customers are costing for company or making money for company, so that the company can monitor their profitability performance. Third, concentrate on maximizing the needs of profitability customer. CPA also helps the company to focus on maximizing the most profitability group of customers, which entitled to be their loyal customer by maximize their wants and meet their expectations. Those companies that understand which customers are more profitable and which are not are provided with valuable information needed to make successful managerial decisions to improve overall organizational profitability. Lastly, formulate different technique for a different type of customer. CPA also help company in formulate different technique of pricing for a different type of product and customer so that they will know which customers that can afford to pay certain level of price. Okay, now let's look at the example. Based on the example, A is the most profitable customer since the net profit associated with the customer A is the highest, while C is the lowest profitable customer since it generates the lowest net profit. So now we know who the best customer and how important they are. From that, we should focus more on the customer A by keeping them happy to ensure they will consistently purchasing product from us. For customer C, we have to find alternative either to turn them into more profitable customer or eliminate them. This is because when we calculate their net profit in detail by deducting all the costs associated such as cost of products, marketing, electricity and others, the total cost probably more than the revenue they brought to the company.
Hello everyone, I'm Aisha. Next, I will continue with the 6 steps of CPA. The first step is customer segmentation. The second one is revenue attributable to each segment. The third one is use activity-based costing to determine the cost attributable to each segment. The fourth one is analyze the profitable versus the less profitable or unprofitable customer segments. The fifth one is develop strategies to maximize profits from profitable customers and reduce or eliminate less profitable or non-profitable customers. The last one is review the impact of the new strategies on the performance of the customer segments. Next, I will explain further about the steps of CPA. The first step is customer segmentation. The basis for customer segmentation will vary between firms and sectors. There are two fundamental ways to customer segmentation, which are demographic and psychographic segmentation. Demographic segmentation based on observable criteria such as customer age, gender, and income level, while psychographic segmentation is based on customer demands and behavior, such as values, attitudes, and interests. The second step is revenue attributable to each segment. Once segment have been determined, yearly revenue is calculated per segment. How this is done will depend on the company's product or services. To identify the exact amount of revenue earned by each customer and the aggregated amount from the customer segment, thus adjustment to the price paid by the customer for a product or service must be included. For example, discounts, service fees, or product enhancement costs. The third step is to use ABC to determine the cost attributable to each segment. The annual cost is determined by segment. This cost will include both directly related product or service expenses as well as customers' costs, such as overhead allocation, marketing, sales, and distribution costs. However, these customers' expenses such as quality control and inspection charges, order picking, order, fulfillment, and customer ordering costs are frequently hidden. Since ABC examines individual cost drivers to determine the profitability of a product, CPA also applies the same approach to customers. Therefore, ABC is an efficient method for allocating both types of costs to customers.
Thank you, Aisha. Assalamualaikum. I am Nurhanisa and I'm going to continue to explain on the next three techniques of CPA. Alright, so the fourth technique is to analyze between the profitable and the less profitable customer segments. The profitable customer segments are those customers whose annual revenues exceed annual costs. Since customer segments' profitability is likely to change from year to year, a more realistic analysis might involve calculating profitability over the lifetime of each customer segment. The fifth technique of CPA is to develop strategies to maximize profit from profitable customers and reduce costs from less profitable customers. This stage comprises extensive planning to develop strategies that boost revenue, foster long-term relationships, and improve customer retention and loyalty programs. Strategies might include eliminations and re-engineering to handle both profitable and unprofitable customers. The sixth and the last technique of CPA is to review the impact of the new strategies on the performance of each segment of customers. Any new strategy such as changes in pricing, cost reduction, or customer service should be evaluated after a reasonable amount of time to determine the impact on customer profitability.
So next, we move to the benefit of customer profitability analysis. One of the benefits of customer profitability analysis is it can be increased profitability by removing non-profitable customers and focusing sales and service on profitable customers solely. In certain cases, the cost may be indirect. Firing the customer with low gross margin is straightforward, but an organization should also consider removing customers that pay a high gross margin yet require a lot of effort from its operation. It is important to think about gross margin as well as the cost of servicing that consumer. The second benefit is it provide a method of identifying customer groups who are of lifetime value to the company and who are worth retaining or protecting. When high maintenance client has been disposed of, then it is free the organization up to focus on the more profitable customers. While a successful strategy might be to cross-sell additional products or service to those clients who value the relationship. Another strategy would be the target new customer with the same characteristic as the existing good clients. Customer profitability analysis enhance understanding of the true cost of each customer segment, including taking into account non-production costs when determining profitability. Non-production can sometimes be more significant than production costs. On the other hand, customer profitability analysis has its own limitation. An organization might not have the data capture system to produce an accurate estimation of customer segments' revenue and cost. It is happened because management accounting system frequently focus on products, departments, or geographic region rather than customers. There may be practical difficulties in calculating the costs that may be associated with each segment. Customers' combination of product or service may be overlooked in this analysis. The profitability of customer is determined by the mix of products or service purchased. The risk is that the investigation will be focused on the few products or service, and the influence of other things sold to the client will be overlooked. As a result, it may result unnecessary costs. Annual profitability may not be representative of lifetime value in customer profitability analysis. The cost of acquiring and retaining the client should be weighed against by the customer lifetime earning rather than just the annual earnings. So next, we move to the application. Generally, the approach to customer profitability analysis is on segmenting the customer base is to determine the revenue and cost attributable to each segment, and it is often combined with the activity-based costing (ABC) approach. ABC is a managerial accounting method that traces overhead costs to activities and assign them to objects. In other words, it is a way to allocate indirect overhead costs to product or department that generate these costs in the production process. When the profitable segments are being identified, it will be maximized, while when non-profitable segments are being identified, so it will be reduced or eliminated. The company goals in this application of customer profitable analysis are: it consists of improving on understanding of the firm's source of profitability. The second one is improving on understanding of the relationship between customer and cost. The third one is improving on understanding of the relationship between the behavior of employee and cost. And the last one is better information on decision making about the allocation of resources to customer and market sectors.
Next, to further discuss on the topic of customer profitability analysis, we have chosen Saudi Telecom because Saudi Telecom has adopted the CPA program to understand the contribution each customer makes in order to enhance operations and treatment of its truly most valuable customers. This program helps Saudi Telecom to make decisions to increase customer value consistently and proactively decrease the number of unprofitable customers. The aim of the program is to significantly reduce the cost per customer while increasing profits with smart planning. As per discussed earlier on the techniques of CPA, Saudi Telecom has utilized the CPA techniques. Saudi Telecom optimized the cost elements and brought unprofitable customer to a break-even point. For example, it expects to increase profits by approximately 16%. Afterwards, the customer value management team has been in charge of integrating the data. Once customer level profitability was calculated and validated, customers were categorized into value-based segments. With the value calculations and segments in place, Saudi Telecom has begun to identify areas of opportunities and use cases to derive value from the project. The team is implementing a number of initiatives related to customer service, product and pricing, strategy, customer retention and loyalty activities. So next, let me explain briefly on the 3 insights created from the program, which are the customer service, product and pricings, and retention and loyalty. Firstly, for customer service, by adopting the program approach, Saudi Telecom can identify exactly which customers are providing value to the firms and prioritize them for treatments at high cost. And then in the context of product and pricings, Saudi Telecom can have an understanding of the customer level profitability that enables a wide view to be created that can be used to optimize prices of products and services. Lastly, from the program, Saudi Telecom can identify the insights of retention and loyalty of the customer. By adopting high profit customer, soft benefits such as priority treatments and invitations can build deeper bonds with the customers to retain them. So all these insights will be used to optimize its customer portfolios and reduce costs. Overall, the application of CPA in Saudi Telecom has taught us that CPA can create visibility in the customer level profitability and therefore provides the best opportunity to make decisions about how to treat different customers differently to achieve the company objective.
Now, I will discuss about the issues and challenges of customer profitability analysis. Firstly, management must develop reliable customer revenue and customer cost figures. Most often, the reason for unreliable information is due to inadequate information systems. CPA requires a system to accumulate the information across all business functions and geography areas. Secondly, management must incorporate a multi-period horizon into the analysis. Customers that are unprofitable during one period may turn out to be profitable in the long run. If management only focus their attention on current period reports, they may decide to drop the customer who in the long run would be profitable. Next, management must recognize and estimate future downstream costs of customers. Two areas that are especially challenging are environmental and litigation costs. Simply assuming that future liability costs will be zero can lead to substantial overstatement of customer profits. The final challenge that management must overcome to analyze customer profitability is to recognize different drivers of customer costs. Original customer profitability reports assume that all costs are variable in the long run and none of the costs are joint. However, relaxing these assumptions may lead management to more accurate reports. CPA emphasizes the importance of attracting and retaining profitable customers. This is still a relatively new area of management accounting, and much research still needs to be done. However, the underlying principle is simple. Each dollar of revenue does not contribute equally to net income. Therefore, management should analyze their customer base and determine which customer to serve.
Last but not least, for the conclusion, taking the time to evaluate each area of customer's journey, your company can review insights that have meaningful impact on your business strategy and your bottom line. Customer profitable analysis is performed to evaluate which customers are profitable. It enables companies to focus on the right customer. This helps the company to define clear goals for each customer. We may also estimate how profitable customer will be in the future by using customer profitability analysis. We can also identify potential trends in their purchasing behavior. That's all from us. Thank you.